Hello, and welcome to myfinancesteacher.org. And if you remember at myfinancesteacher.org, I do thank you, and I want you to know that I truly appreciate your support. Once my PayPal account is back to normal, I'll focus more on making members-only analysis rather than lately more frequent public analysis on YouTube. But for now, let's have another market review. Looking at the general stock market, S&P 500 is in front of us, I think, going into the FOMC meeting in the middle of June. We will see S&P 500 as well as Nasdaq climb a little bit higher, perhaps to marginally new highs, perhaps to poke above the Bollinger Bands several times before going down into the end of the ongoing short-term daily cycle. So far, the daily cycle is 26 days long. Usually these cycles last for 2 to 3 months on the S&P 500. The FOMC meeting is on the 16th of this month. By then, the daily cycle will be 35 days long, which perhaps would be close enough to the midpoint. After that, there would probably be some risks associated with investing into the market that late and perhaps at new highs. So while with the members at myfinancesteacher.org, we are holding some SPY and QQQ positions, which have very modest gains of just about 1%. I think I am going to continue holding these positions for perhaps another couple of weeks, and I will continue bringing up my stop losses before that decline into the ongoing short-term daily cycle. Talking about the intermediate cycle, which has been going on since early March, so far the intermediate cycle is 95 days long. That's over 3 months. Usually these cycles on the general stock market last for just over half a year. In another couple of weeks, the intermediate cycle will be over 100 days long. Perhaps that would be close enough to the midpoint. Perhaps that would be close enough to the top of the intermediate cycle. And whether the next short-term daily cycle will make a new high or not is not going to be extremely important in my opinion. We'll have a chance to cross that bridge when we come there, but by then we should be careful with the decline into the intermediate cycle low, perhaps sometime in the late summer. Looking at the 14-day RSI, if the general stock markets gradually rise over the next few days before dropping into the short-term daily cycle low, perhaps RSI might actually give us some sort of a divergence from the previous high in mid-April. If RSI continues to rise gradually with the stock market before dropping a little bit into the short-term daily cycle low, that would create a lower high on RSI versus perhaps a higher high on the general stock market over the next couple of weeks, which is a negative divergence, which often precedes some sort of a significant decline, perhaps into the intermediate cycle low. Talking about the FOMC meeting in mid-June, so far, the 5% of the markets expect that the rates are going to rise a little bit, while 95% of the market participants don't expect any changes to the current interest rates. In my opinion, the rates are not going to change, even though we already feel some inflation over the last few weeks. But perhaps as the general stock markets aren't dropping anywhere, as the general stock markets are still strong, and by the time of the FOMC meeting, as S&P 500 might actually be making new highs, for all of those reasons, perhaps the Fed might talk somewhat hawkish in mid-June, which might actually bring down the stock markets into that short-term daily cycle low. Next, looking at the Optimism Index on S&P 500, we see that the index is still below 70, and I think we still have, again, perhaps another couple of weeks for the stock markets and optimism about the stock markets to rise a little bit, to cross above 70 before cooling off again. Next, let's have a look at the dollar index, and as I mentioned in one of my previous videos, I really wanted to see dollar to come to this resistance of 50-day moving average. Perhaps there is a chance that dollar has already started to slide down into the short-term daily cycle low, even though the daily cycle is only 14 days old right now. On the other hand, I think there is a slightly better chance, that's probably close to 55% chance versus 45% chance, that dollar has another one more push higher just over the next few days to finally come to that resistance zone at 50-day moving average before dropping into that daily cycle low, and perhaps which might be the intermediate cycle low lasting over here from the beginning of this year, which perhaps into midsummer will come close to the average duration of just over half a year. And by the end of this intermediate as well as the daily cycle low, I think we might expect dollar to finally come to that support zone at about 88, which it didn't do at the most recent daily cycle low in the end of May. So whether dollar pushes a little bit higher over the next few days or not is secondary, while the primary concern here is dollar going down into the ongoing intermediate as well as the short-term daily cycle. That means that looking at gold, I really would like gold to come a little bit down over the next few days to properly retest this downtrend line that's been respected all the way since August last year, and to come closer to retesting this 200-day moving average. That will also bring the duration of the ongoing short-term daily cycle somewhere closer to the average duration of around 1.5 months. These cycles usually last anywhere between 1.5 to 2.5 months. Of course, there is also a chance that gold just shoots higher from here, meaning that the daily cycle finished a couple of days ago, lasting for only about 36 days. And that's also a possibility. So as I mentioned in my previous video, over the last couple of weeks, I did reduce my allocation to precious metals by about 1/5, while still holding 4/5 of full positions. And it would be nice to get a chance to get back to completely full positions over the next few days before the continued rally into the top of the ongoing intermediate cycle. So talking about the intermediate cycle on gold, so far it's only 92 days long. And usually these cycles on gold last for about half a year. So I think there is still chance for another push higher into the third short-term daily cycle, which will possibly bring us the top of the intermediate cycle, perhaps close to $2,000 before gold drops into the intermediate cycle low sometime into late summer, early autumn. Looking at the optimism on gold, again, we haven't even touched the red line a couple of weeks ago. So as the intermediate cycle is only over 3 months long, there is still a good chance for gold to push higher and for market participants to become much more excited about gold. There is still time for this optimism index to break above the red line, and that's when you should start being cautious. When everybody is too excited about gold, perhaps that's time for you to bring up your stop losses a little bit tighter and maybe even reduce your allocation. Next, looking at gold miners, GDX, a relatively similar picture as on gold. As I mentioned, I would like to see GDX to come closer to the 200-day moving average over the next few days, come closer to this previous high that's somewhere close to 37. I've already talked about that in some of my recent videos. An additional interesting observation here on GDX is that it looks like there has been a more or less symmetrical triangle over the last couple of weeks on GDX. And what we are observing is perhaps a breakdown below this triangle, and a couple of last two green candles might be simply a retest of the triangle before continuing down for a very short term into that daily cycle low, which, as I mentioned, would be followed by a rally into the continuation of the intermediate cycle. If we're indeed observing a breakdown from this symmetrical triangle, the target for GDX would be based on this triangle height. Let's say that's somewhere around $1.6. The target from that is somewhere around $37.3. As I mentioned, I'm trying to catch GDX close to that number of 37. But again, nobody knows the future. Perhaps GDX is just going to shoot up from here, in which case I'll simply add back to my full positions. But as I mentioned, I'm still holding a very sizable allocation to precious metals, as I think the risks on the downside are relatively low as opposed to the potential of continuing higher into the top of the ongoing intermediate cycle.